But how is the stock expected to react, and what your strategy be like when it comes to Asian Paints? Let's welcome Mayuresh Joshi on the show right now. And Mayuresh, morning, good to be speaking with you. Firstly, help us with your first take on Asian Paints. The numbers, how were they versus the expectation, and what exactly did you like when it comes to the management commentary?
Morning, Srishti. No, I think when it comes to the decorative volumes, I think they were better than what the street probably expected. And therefore, on the volume growth front, it's largely a beat as we see it. Obviously, I think with expectations of input costs remaining far more stable in the coming few quarters, the large part of expectations getting built in with better festive season around this time round will be better volume growth and therefore with better control over input costs in the second half. The expectations of operating leverage actually playing out can actually be better for Asian Paints. Obviously, you have got competition to comprehend. Competition intensity is here to stay within the paint sector. But generally, I think the period of sluggishness that these companies have probably gone through and the expectations of demand coming back slowly and steadily will start reflecting in relatively better volumes in the second half. And with benign input costs, which are expected to stay, there can be expectations of better operating performance. Decent volume growth this time now. If this persists, along with other factors at play, the second half numbers can be relatively better for Asian Paints and the paint companies.
Right, okay, so that's the take on the outlook for Asian Paints. But Mayuresh, I want to ask you about one piece of management commentary in particular, wherein they've gone ahead and retained that 18 to 20% margin guidance. Given the way the competition is evolving in the sector, how achievable do you think this number is going ahead?
I think margins are based on two factors. One, obviously, in terms of how the demand conditions are expected to evolve and how the input cost situation is expected to play out. As I just mentioned, I think the expectations in terms of input costs, if they remain benign, as it seems to be a base case scenario, I think there is expectation that there will be some reasonable uptick or stability that you see in margins. At the same time, as demand comes back slowly and steadily, both in terms of urban and rural demand as well, because of all the host of factors, tax cuts as far as urban markets are concerned, and better monsoons as far as semi-urban and rural markets are concerned. I think a large part of the expectation pool is that a combination of both these factors might make us believe that the margin trajectory might be back. And again, I think the scenario in terms of competition intensity, price cuts, when it probably comes to the more premium and the distemper part of the market, I think that should largely be behind us. Let us also not forget that the unorganized market is also pretty large as far as the paint sector is concerned. And because of these players increasing their distribution reach, their dealership reach, and because of the presence that has now got in terms of the bridging, in terms of the organized and the unorganized players, GST compliances, and the unorganized market slowly and steadily fading away, I think there is every hope that if all these conditions come together and a combination of all these factors come at play, I think there can be a better volume growth and better operating leverage.
Okay, so that's the take on Asian Paints. Mayuresh, appreciate you joining us this morning. Thanks so much for your time.